Delivery numbers are in and they looked very strong, and the stock is running strong as well. But is Wall Street setting us up once again for destruction and devastation? Or are they finally on board the Tesla train and ready to rocket forward with us? Well, let's hear directly from Wall Street, and I'll give you my take on it as well. Just make sure you like the video if you like getting the truth without the hype. Now, Tesla is sitting right around $230 at the time of this recording, so it has absolutely been on a big run here lately, which we're up 30% and 60% on our buys just this year in the group in Tesla. And those group members saw those buys in real time, and one of the biggest discounts ever for my group expires this weekend. So make sure you take advantage of that so you can get those type buy and sell alerts in real time, and my other buy and sell alerts on Tesla, like buying it at 103 or so. Owning Tesla is about discipline and patience, and that is exactly what we teach in the group. Not getting in and out and not jumping out of this and then shorting that and then playing all these other games and all that other Wall Street BS. Just solid buy and hold fundamental analysis, understanding of the company, and more importantly, being judicious with when you buy the stock. Again, we are up 30 and 60% respectively just this year, just in our group, without playing any of those games, none of that other crap or anything else like that. So check out the pinned comment if that sounds like something you'd be interested in. And obviously, if you want to trade and play all these other games and it's not right for you, but for those of you guys who don't want to play those games, make sure you check out the pinned comment down there and take advantage of that sale before the sale expires. All right, so let's jump into the video here, see exactly what Wall Street's saying about Tesla stock and these delivery numbers. And at the end, I'll tell you exactly what I think this means to earnings and, more importantly, the stock price, because that's what matters.
Tesla second quarter deliveries came in above expectations. The EV giant revealing the numbers just moments ago. Joining us now is Bloomberg Technology co-host Ed Ludlow out of San Francisco. So Ed, beating by what, 3, 4, 5,000 in terms of deliveries. What's the story?
Yeah, it's a beat and some relief in the stock relative to street expectations. It's important to note that even though deliveries beat, it's still a decline year on year of about 5%, I think 4.8%. And you could also look at...
Now that right there is an important point, and it's what I pointed out to my group as soon as we got those numbers out there. Not because I didn't like the numbers or anything else like that, but just to make sure we cage expectations from all the craziness that seems to follow Tesla, where sure, it's down year over year, but it's the greatest deliveries ever, an incredible and impossible feat, and therefore it should add $1 trillion to Tesla's market cap. It was just simply to tamper that expectation, and some folks out there who are going to run with that type narrative to not get caught up in that sort of narrative and kind of understand the bigger contextual piece that they're still down year over year, which means we're still seeing struggles in the business. Although we talked about right here on this channel, I feel like we're kind of troughing and starting to move in a better direction there. But it still means you're down on the trough. And I kind of wanted to make sure we emphasize that here. And they actually pointed out right there. Now, obviously, some on Wall Street will take that and extrapolate it out as, okay, well, they're just going to be down year over year forever. That's not true either. Anybody taking it, the bears taking it to that extreme are just as ridiculous as the bulls taking it to the other extreme, that it's the greatest thing, since the, history of dawn of mankind or something like that. So kind of learn to ignore both of those, figure those two things out, and understand that the truth is somewhere in the middle there. But I just wanted to point that out there because it's something very specific that I think is important to keep in the back of your mind. So that way you don't start daydreaming too much about Tesla to $800 by the end of the year, Tesla to $1,000 to the end of the year, which is what a lot of people are actually expecting or think it's easy to get to. And nothing could be further from the truth in regards to those types of numbers.
Production level being markedly lower than in the same quarter a year ago. What I find really interesting, Matt, is that I was in New York City for the first quarter numbers, you might remember, where the release had so much detail about the factors that were impacting Tesla in the first 3 months of the year. But in this release for the second 3-month period, there is no commentary at all, which is interesting. It's a considered omission. But we did hear quite a lot from Elon Musk on the last earnings call, of course, about the factors that are impacting both demand, but also operationally and supply right now.
I haven't,
Yeah, I could care less about that. That's just, I might think something of it if Elon was a typical CEO, but I mean, really the guy can choose to give commentary, not give commentary based upon his time, what mood he's in, a lot of other things like that. He's not as corporate as a lot of other CEOs are, so I don't read anything into those sorts of things. They can just simply be something as goofy as a mood or just simply too packed of a schedule and not able to put something together before the delivery numbers were released. It could be something as simple as that. So I wouldn't read anything into that.
To the detail in a long time, Ed. And of course, you cover this company very closely. But to me, it was surprising that almost all of the vehicles they sold were Model 3 and Model Y. Do they not even sell the S and the X anymore? I mean, it looks like, what, 20,000 of those more expensive models, and the other 420,000 were 3 and Y?
Yeah, I mean, Elon Musk and other Tesla executives have been honest that they largely still make the S and X for sentimental reasons. It is not a volume product. You know, the plaid version, the rethink that they did in the latest generation, it's an expensive and premium product. And there's equal surprise when those less familiar with Tesla also hear the Model Y.
So right there, that just tells me the guy doesn't listen to earnings calls, which most of these Wall Street pundits who are out there giving you hot takes and things of that nature, they're just taking the highlights of the earnings call or whatever the heck right now everybody, I guess, is probably using AI, ChatGPT or whatever, just punching it in there, whatever the heck they give us the highlights, that's what they're going through. And that's all they know about the earnings call because they're not actually listening. So that's why that guy hasn't heard that before. Obviously, or it could just be a setup question to give this Ed Ludlow guy something to talk about there. But the next point they make right here is really, really interesting, talking about the Model Y.
It's technically the best-selling vehicle model in the world.
In the world. That bears repeating, Ed, because I did not know that, and I look at cars all the time. So is it, I mean, I would expect the Toyota Camry, you know, the Ford F-150, like the Honda Civic. The Model Y outsells all of those other single models.
It does. And
as if this is another new revelation that hasn't been out there for a very long time. So anyways, you just see how ridiculous some of these sort of things go in regards to this. You also see how easily the, what's the word I'm looking for? The average investor who doesn't study, who isn't intimately involved with this sort of stuff, receives their information, gets swayed by the information and other things of that nature there. But yeah, nothing new there, nothing shocking there. It's been that way, and I suspect it'll be that way for some time. I don't see any reason why that would change anytime soon.
Those other examples you noted, well, I would say with Model Y is its uniformity across different geographies. It sells well in the United States, China, and in continental Europe as it stands, where, you know, as you know from experience, there's a bias towards smaller form factor vehicles. I'd also say let's look at what's happening in the China market specifically, because we also got data from China's Passenger Car Association, which showed in the month of June, not the full second quarter, but June, a pretty significant drop in output from the Shanghai factory and also deliveries domestically. And so Tesla is not doing so well in China at this moment in time, but those domestic players, NIO, Li Auto, etc., they're pushing new records. BYD, of course, did very well. And one of those factors that Elon Musk talked about, apart from domestic competition in China, is this admission that Tesla is now directly competing with hybrids, that consumers, when faced with a choice right now in different markets, are opting for hybrids, which I find is really interesting.
So interesting points there. I'll touch on both of them. First piece is the China piece. I've never cared about domestic or even European competition per se. Whenever I hear those types of narratives, I just ignore them. That's silliness. The only direct competition to me to Tesla is China. And as you can see, Chinese automakers are able to compete. This is not, you cannot look at Chinese auto EV makers and go, well, that's just like Ford, that's just like, you know, GM or whatever. Nothing could be further from the truth. When you're talking about real competition for EVs, the real competition is in China. And to say that the competition is catching up in China, or maybe even surpassing, depending upon what you want to look at, is a fair assessment when you're looking at China. Now, for the rest of the world, not true. You know, anybody else saying that, like I said, I completely ignore and I just go, okay, they're either just bearish on Tesla, or they don't study, or they're just, you know, regurgitating whatever the heck the rest of the media is saying out there in regards to that. So I ignore that completely. But in regards to, how they're competing there in China, and of course the second piece there with hybrids, I don't know how much of an effect that is overseas, but I know domestically here in the U.S., whether we like it or not, whether we think it's fair or not, there's still more than half this country that wants nothing to do with EVs. And there is still, regardless of, you can tell me the range is 1,000 miles for a Tesla. It doesn't matter. People are still going to say, aren't going to feel comfortable with EVs here in this country until superchargers are a common thing that we see all the time everywhere, like you see gas stations. Maybe not necessarily to the scale that you see gas stations, But right now, there's plenty of people here in the US that they drive and they've never seen a Tesla charging station before. Maybe they've seen an EV charger or two here or there. And yes, the vast majority of folks here in the US are absolutely going to just charge at their house, but it's the perception, it's the thought, it's getting rid of that range anxiety that's so far there that makes people feel more comfortable with a hybrid than dipping their toes fully into EV. So, like a lot of things in life, you can go from one extreme to the other, or I can kind of go in between and see how I like it. Most folks, especially here in the US, are going to opt for that in-between option first if there's a good option there. Now, we can debate as to whether or not there's good hybrid options here in the US or not. That's a separate debate altogether. But to say that that's not a point where I think a lot of automakers could maybe start to try it, not catch up, but at least enter the race in a favorable fashion, they can absolutely do it that way. So I do see that as a viable argument and a discussion point when we're looking at this from a broader perspective here, at least here in the US.
Because we've changed our psychology about EV buying in the market completely from, say, a year ago.
Well, I've always thought hybrids are the way forward. It just gives you more optionality as a driver. In terms of, product, Ed, the Cybertruck, as exciting as it may be, they're not selling that in volume. As you said, the Model S and the Model X are just kept around for sentimental reasons, also not big sellers. So it's all about the 3 and the Y, and they still have had a decline in sales. I mean, sales are down 5% year over year. That's not great for a company that wants to be a growth story. What else do they have in the pipeline?
And also noting, I just reiterate, the production is also, down relatively significantly to the same period a year ago. A lot of the sell-siders, for what it's worth, basically say that the lineup is stale if you strip out Cybertruck, which is still ramping. Model Y is the best-selling product model in the world, but it's now relatively old. There's not been a refresh or a new model. Of course, on August 8th, we will get a glimpse of Robotaxi. And during Investor Day, you see the PowerPoints with yet to be unveiled models under canvas. So there's a belief that new models are coming. My own reporting is that they will take the work they did on a $25,000 EV and apply the R&D, the technology breakthroughs, to refreshing the Model Y and Model 3 in particular, lower spec, maybe single motor variants. But that's the argument that industry analysts make, that Tesla would do well if they introduce more models at a more regular cadence.
All right, so before we get to what actually matters in regards to the deliveries and Tesla stock, which is most important here, let's talk about those last few points. So when I look at Model 3 and new models, my own personal belief is part of what hurts margins and just legacy auto in general is this idea that you need to have a bunch of models and a bunch of different options and everything else like that. I feel like when you start doing those sorts of things, clearly that business model doesn't work anymore. Maybe it worked for a period of time. Maybe it worked for a period of decades. I don't know. I'm not going back and studying the auto industry, from the early 1900s forward. But I do believe that maybe that's not the right business model in terms of sustaining profitability, in terms of sustaining margins. And, maybe the optionality comes in colors, maybe a few different trim packages, but having a lineup of 15 different models may not be the best way to grow a car company in the future. Like I said, that may have been something that made sense 30, 40 years ago, but it clearly doesn't make sense now. And no other automaker has been able to figure out how to make that make sense. So I don't want Tesla to go down the route that all the analysts and all the car industry experts want them to go. I much prefer what they're trying to do right now. And obviously taking the innovations from the $25,000 car, if they're actually not going to do the $25,000 car, and putting it into Model 3 and then, maybe refreshing the Model 3, Model Y, however the heck they choose, and obviously some of it into the Robotaxi event as well. I think that it's a much more prudent way for Tesla to do. Now, we're all speculating. I'm speculating. This guy's speculating. We don't know until they unveil some of these things exactly what's going on there at Tesla. But I do believe that they're going in a much more prudent direction in regards to actually working with the right number of models and slowly scaling out more models and a bigger lineup, not exploding to 25 different models and stuff like that. I do believe those were mistakes that automakers made in the past. And it doesn't matter whether consumers will want it and whether or not you got a demand for it. If it just bankrupts your company, what's the freaking point? That's not running a good business. And for us as shareholders, that's what we care about, is running a great business. So I actually like the way that they're trying to do it. But on to the delivery numbers, potentially seeing them beat expectations, maybe seeing a bottoming in terms of deliveries and starting to march back up, get back in that positive territory of growth in terms of deliveries again year over year, and some other things like that. And what does it mean for the stock price? So when I saw all the delivery numbers and all the excitement around it and everything else, what is going to matter in the end, you guys know that I say it, but what's going to matter is valuation. I don't freaking care whether deliveries blew it out of the water or not. I care about what are those margins are going to be and what is the EPS going to be, so that way I can then do the actual math, do the actual valuation for Tesla to see is it overvalued or undervalued based upon the EPS number that they're going to give us. Because in the end, if that comes in disappointing, it's going to cause the stock to trade back down, because you could make a case before these delivery numbers were released when we were at 180, 190 or so share price. I'm not talking about folks that think it's, significantly overvalued or significantly undervalued. I'm talking about those of us that have a reasonable valuation for Tesla there. It was right on that edge of being a little bit rich based upon the EPS. Based upon what they were giving us in earnings, it was right on that line of maybe fair valued. If you wanted to argue fair valued, a little bit undervalued, or a little bit overvalued, all three of those arguments to me were very, very reasonable. Significantly undervalued by hundreds of dollars per share, or significantly overvalued, because you have Tesla stock down at 30 or 40 or something like that. Okay, we can just kind of get rid of that sort of stuff, get back to a much more normal valuation, basically, a 60 multiple or so for Tesla. If we get to that earnings call and the multiple, wherever the heck Tesla stock runs, whether it stays right around 230, goes up to 250, whatever the number is, guess what? If we don't have EPS increase significantly, that stock's going to come in at a multiple of 90, maybe 100, maybe more. And at that stage, it is going to trade down. Now, I'm not talking about directly what happens right after earnings when all the algos and all the traders are all going nuts and everybody's manipulating. I'm talking about when the dust settles and the bigger investors are actually sitting down and analyzing the earnings. They're going to see it's trading at a really rich multiple, and they're not going to be buying the stock anymore. And therefore, it's going to take that momentum down. So that for me is what matters, is what number are we going to get on that earnings? If they found a way to increase those margins, that tells me everything is moving in the right direction. And we're going to see that reflected as long as the stock doesn't run up too much in regards to earnings and being able to show that it's actually at a fair value and not overvalued like it's going to look right now on its current run rate. But if that EPS does not increase and we see margins continue to erode or stagnate still for another quarter, that's going to be a problem for Tesla stock, because that valuation, especially if we run up, into earnings, which Tesla, we all know, runs big sometimes into earnings there, we're setting ourselves up for, basically a nice downward mood after the earnings dust has settled. What does that mean? Just like we took advantage of it earlier on this year, down in the 160s range, 169, 69 actually. It just means opportunity in the end over the long run, but you just got to be cautious with these types of moves in Tesla stock and not get all excited about the narrative, but understand that what matters, regardless of the bull or the bear narrative, is earnings in the end. And remember, if you want to see all those buy and sell alerts in real time on Tesla, you want to see my complete watch list with price targets, you want to take 5 courses for free, be a part of the best 6, 7, and 8-figure Discord out there, get your free coaching, use our stock analyzer tool for free, be able to jump in our live Q&As, talk to me anytime you want, slide into my DMs. Just guys, there's so much in the group. Check out the pinned comment. Take advantage of the sale before the sale expires this weekend for my group, where you're getting one of the biggest discounts ever. And click this video here if you want to see exactly what I'm buying in this market. And click here to see my exact plan for this market. So thanks for watching, and we'll see you in the next one.